Hello friends, how are you all doing? I'm Nagendra. I'm back with my next video. First of all, I'm sorry, making this video took some time. Last 10 days had been a roller coaster here. A lot of positive things happening and all for good happening. Before I start the next topic, I want to thank you all for giving those feedbacks and appreciations. All of you have open-heartedly accepted my video series. Thank you for that. Some of the great comments and feedbacks were received. One to quote specifically is from one of the software engineer who never studied accounting. She mentioned that she never studied accounting anytime before, but she started understanding accounting watching my video. That's amazing actually. Thank you for your patience and trust in my teaching methodologies. Thank you. Second one, many of you have reached out to me giving feedback and appreciation. Your feedbacks are well considered. Thank you. As you can see, each video is an improvement over the previous version. I'm doing these video series for the first time, so even I'm learning as we progress. You always will see a improved version. You also have indicated some of the good topics and how to diversify the topics. One of the key feedback received was about the length of the video. These accounting concept videos are little lengthier, which mainly intends to make someone understand the accounting concepts. Should a professional who already is aware of basics of accounting be watching the video, they may feel it too elaborate. What I'll start doing is I'll create a shorter version of the same video, which I'm going to name it or prefix with a word summary, and will share in professional word, be it LinkedIn or some other places, which can be referenced by you all. Should you require a detailed explanation of those, please refer to the detailed video. Or people who are watching detailed video can use summary video only as a refresher, or else they can ignore that video. Last week I also released one of the video about a case study. I have received good appreciation about those case study series. I'm going to make more videos about these corporate world case studies that helps us understand a lot of other concepts and how things work. I probably also will come out with a few of the other topics, like some of the interesting sections or some of the interesting laws worldwide or case laws worldwide. They are probably in story formats and will be very interesting for all of us to know. Keep watching and sharing these videos. As promised in last session, today we are going to see what are the key financial statements that must be published by any of the business enterprises and what does it carry? What are the information or the relevance of those financial statements to the users of the financial statement? Talking about key components of financial statement, any of the financial statements will have balance sheet, profit and loss statement. Of course, there will be schedule to balance sheet and profit and loss statement, but they are part of them, integral part of them. Then it will be followed by notes on accounts, and further it goes to statement of changes in equity, then the cash flow statement. All of these statements have their own information, their own significance and purpose for users of the financial statements to get a comprehensive financial picture of an entity. In subsequent slides, we are going to detail out on each of the financial statement and check what do they really contain. Here comes the balance sheet. As you can see in top left corner of the screen, I am sharing you a draft template of the balance sheet. This balance sheet consists of assets being shown on left side and liabilities and equity shown on the right side. There's also a vertical format of the balance sheet. When it comes to balance sheet, these statements are always drawn as of a given date. They are not for a period, but it says the balance sheet as of 31st of December or 31st of March or any of that period, because it indicates status of the assets held by an entity and liabilities owed by an entity and equities of partners or the shareholders as of a given date. The components of balance sheets of assets or liabilities are normally classified into short-term assets and liabilities and long-term assets and liabilities. For the purpose of ease of understanding, any of the asset that gets liquidated in a year's time is called current, rest are non-current. Same with liabilities, any of the liabilities you have to pay off or settle in a year's time are called current, rest are non-current. Further to the profit and loss statement, among the financial statement, any of the non-accounting person will first want to see profit and loss statement. Given a profit and loss statement, first thing everyone looks at is the bottommost number that's indicated, that's net profit, and the topmost number that's indicated, that's the revenue. However, a profit and loss statement provides a lot of information about several current period transactions. So as indicated, profit and loss statement is always drawn for a period. It can be any of the period that the user want to have it for. Any of the published profit and loss statement will be for a period of 12 months, but it can be for a listed company drawn quarterly. For management reporting purpose, this can be drawn monthly. Profit and loss statement carries majorly revenues. Please note, everything that you sell is not revenue. Revenue is something which an entity earns. So revenues are shown in here. Then the cost of goods sold, any of the expenses that are incurred in direct relation to your revenue or cost of goods sold. Then a gross profit is indicated. This is actually the gross margin which is earned by an entity by directly trading or directly selling those goods or services. Then comes the indirect expenses, which will majorly include sales and distribution expenses, administration expenses, and rest of all other costs, including depreciations and everything. So that provides income from operations. To this, we again adjust indirect income or non-operating income, be it probably the interest earned, dividend earned, or any other ancillary activity revenue. They are indirect income for an entity. And any of the expenses which are incurred but not in direct relation to your main operations, let's say a bank interest paid, a penalty paid, they are called non-operational expenses. These are again netted off to arrive at net profit. Of course, in subsequent videos, we are going to see all these financial statements much more in detail. We'll have a better understanding of these. What I have shown on left side of the screen here is a draft template of how a profit and loss statement can look in a vertical format. Of course, this can be drawn in horizontal format also, which we call T format, where we show revenues on the right side, the credit part, and expenses, be it direct or indirect, on the left side, which is debit.